Hey, what's going on, traders? Thanks for checking out this video. My name is Travis from Master the Market, and this is going to be a quick video talking about 5 stocks that are approaching oversold territory on their charts, meaning that they've been dragged down a little bit by this recent pullback in the overall market, and they're likely going to make a nice bounce in the near future. So to kind of show you and explain what I mean by them being dragged down by the overall market, you can see that by looking at the SPY ETF, which is the ETF for the S&P 500 index. There's been a little bit of a pullback over the past week or so, and more specifically, it's been mostly in the technology sector of the market. So if we look at stocks like Apple, for example, we saw Apple sell off from about 145 down to a low today of about $118 per share. Another good example is Microsoft. Same thing with Microsoft. It's had a pretty big sell-off compared to the overall market. And there's going to be a lot of stocks like this that kind of fit the same criteria, that have had a pretty big sell-off and are going to be good opportunities to buy into them on these pullbacks while they're approaching their oversold levels in the market. If we look at the heat map over the past week, you can see that, again, Apple down 5.5%, Microsoft down over 4%. We see some red in Google, some red in AMD, Nvidia, Amazon, Tesla down over 12%, PayPal down about 13%. All of these are really well-known and reputable companies that are, for the most part, just being dragged down by the overall pullback in the market. And that's exactly what you want to look for when you're buying into stocks that are approaching their oversold levels on their charts. Okay, now with all of that being said, the first stock on this list that I think is going to be a really good buy opportunity is actually going to be Apple. If we look at the chart for Apple, you can see, again, this sold off from a high of about 145 down to a low today of $118. It's already started to have a really nice recovery to the upside. It formed a very bullish candlestick pattern here on the daily chart. And more importantly, the reason that this is such a low stress trade to get into, really in my opinion, anywhere below $130 per share, is because Apple is Apple. And at the end of the day, everybody knows Apple. It's a very well-known, reputable company. And recently, actually, when the stock was up here at about $140 per share, they actually put out their earnings report. And contrary to what you might think by looking at the chart since that earnings report, it was actually a very positive earnings report, and they reported record-breaking revenues for the company. So in my opinion, once the entire technology sector starts to rebound, Apple is going to be leading that bounce back to the upside and is going to make a really good opportunity to buy into the stock at or around these current levels. Okay, so stock number 2 is actually going to be Tesla. Now, Tesla has been a beast lately. It's pretty consistently outperformed the market. Whenever we see the S&P 500 up 1%, for example, it's pretty common to see Tesla being up 2, 3, even 4%. However, that ends up being kind of a double-edged sword because of the volatility in Tesla, because now that the overall market has been down a little bit recently, we saw Tesla take a pretty big hit. It fell from a high of about $900 per share down to a low today in the low 600s. And again, just like Apple, it is starting to bounce back up. But according to its RSI, it is still down in the oversold territory. And in fact, if you look at the RSI currently at about 32 on the daily chart, the last time that the RSI was this low in Tesla was back in early March of 2020 during the peak of the coronavirus pandemic. Obviously, we can see how well it was able to recover from those lows. And looking at Tesla's chart over the past couple of months, it's been very bullish. So I'm hoping that now that it's back into these oversold territories, it's going to bounce back up and continue that bullish run to the upside. And in my opinion, in the very near future, we're going to see Tesla back above $800 per share. Now, stock number 3 that is approaching oversold levels and is going to be a good opportunity to dip buy potentially is going to be RIOT. RIOT is a Bitcoin-related stock that moves pretty similarly to the price action of Bitcoin itself. So if you're somebody that is interested in cryptocurrency and Bitcoin investing, another way that you can actually profit from the overall price action in Bitcoin without buying Bitcoin itself is to look for stocks that are related to blockchain and Bitcoin. And of course, that is the category that RIOT falls under. You can see that obviously RIOT is not quite at oversold levels, but its RSI is getting down to the lowest point that it's been in a while, and it has had a pretty big sell-off from its recent highs. So I think there's a good chance for a bounce back up in the near future, as long as the price of Bitcoin is able to recover back up as well. To kind of give you a comparison of the Bitcoin chart, you can see that RIOT was spiking up to new highs just as Bitcoin was able to break out over that $50,000 mark. Since then, we've seen a little bit of a pullback in Bitcoin, which is really the sole reason for RIOT pulling back as well. So again, if you're bullish on Bitcoin and you believe it's going to be back over $50,000 per Bitcoin in the near future, then it is pretty safe to assume that we're also going to see RIOT take a nice recovery bounce back to the upside, likely getting back to $60 or above in the near future. And in fact, it actually has a gap here on the daily chart, which looks to be at about $60 per share. Gaps on these charts tend to get filled over time. So I think for now, being at about $48 per share, $60 is a good short-term price target for this stock if it is to bounce back up. And you may actually want to look at that as a potential level of resistance, because many times when a stock does fill a gap to the upside, it ends up doing what is known as a gap close reversal. So it will close this gap up here to about $60 per share. And again, that may end up becoming a level of resistance, and the stock may reverse back to the downside from there. But of course, that's something to worry about in the future if we do see a nice bounce up. And for now, this is just a good opportunity to watch this stock and potentially buy into this pullback to profit from it once it recovers along with the price of Bitcoin. Okay, so that's going to lead us to stock number 4, which is starting to get to oversold territory, and that is going to be MRK. Now, MRK, which is the symbol for Merck Healthcare, is, in my opinion, setting up to be a really good swing trade opportunity, really just based on the technicals alone. So if we look at the price action since this started to recover, after the big sell-off that pretty much the entire market saw from the coronavirus pandemic back in 2020, you can see that over the past months, it's been able to kind of trade in this same price range with pretty clear levels of support and resistance. So we can see that resistance is about at $85 per share, and support is down here at about $74 per share. Of course, there was one brief breakout above that resistance line here, but it pulled back down, and there was a few other times where that seemed to be a pretty clear level of resistance. And the same is true for the support down here. At about $74, there's been a few times where it bounced almost perfectly off of that price level, which is really where the price of the stock is kind of consolidating at right now. So in my opinion, this is setting up for a really great risk-to-reward ratio, because we can use this support level as not only an opportunity to buy into the stock, but it's also going to be a risk level. So if it happens to break below that support level, we can use that breakdown below support to cut our losses and move on from the trade. So in this case, you'd be risking maybe $1 or $2 per share at the most. And the upside potential, assuming that it's able to stay within this channel again and bounces back up to the resistance in the near future, is anywhere from $10 to $11 per share. So MRK is definitely a stock that I'll be looking to take advantage of in the near future, being that it is such low risk. And at least from a technical standpoint, it's looking like it's going to be a really good swing trade opportunity. Okay, and that's going to lead us to stock number 5, which is going to be Wkhs. Now, for any of my gamblers out there, this is going to be right up your alley. This is a little bit higher risk, higher reward than the others on this list. And you can see pretty clearly that Wkhs, or Wkhs, had a pretty big sell-off to the downside today, closing down almost 50% on the day. Now, I'll go ahead and put a screenshot of the article up on the screen right now, but I believe this sell-off was due to not receiving some kind of deal that they were expecting to do with USPS. And from what I understand, this was a huge deal. And the reason for a lot of this bullish momentum that we've seen over the past months was simply in anticipation that this deal was going to go through. So now that the deal is off the table, there was obviously a huge sell-off in the stock. And quite frankly, there is a good chance that this will continue to downtrend over the next couple of days, over the next couple of weeks, even over the next couple of months. Now, that's exactly why I mentioned this as being a higher risk, higher reward setup. I do think eventually it is going to offer some good opportunities for a bounce play that may be at $10 per share, that may be at the low that it hit during the day today, which was about $12 per share, or $12.50 per share. But for now, simply because this is significantly oversold now on both the daily and the 4-hour time frames, it's definitely going to be one that I'll keep on my watch list in the near future in case it is able to find some support and start to bounce back up to $20, $25 per share. Okay, so I hope you found this video helpful. If you did, please make sure to give the video a like and subscribe to the channel so you don't miss out on future videos and future lessons. And of course, if you're interested in learning a little bit more about day trading, swing trading, and even long-term investing, make sure to check out our Master the Market programs down at the link below. But anyway, until next video, thanks for watching and good luck with your trading.